Let's get going with the AVID market update. What is going on in the real estate market? Well, I'm StacyA McBain from Swope, and I'll let you know right now. We're moving from that prime spring season into the slower moving heart of July, perhaps the hot dog days of summer. And this is the first ever mid-year mark that I can think of, because we're looking at all up to June closings, where we have only sold one unit properties, single family homes, whether they're investments or owner occupants. So that's an interesting sign of the market right there. Those multi-unit sales just haven't been coming and going quite as much. The market is variable. Like I said, homes in the same subdivision are selling for a greater variance in prices when they're very like-kind homes than I would expect to see. And I think that's a sign that, for example, buyers and investors, they're pushing a little bit harder for negotiations, and in some, but not all cases, they're landing those negotiations. Our clients are happy, but is it us making this happen? I think that the number of homes for sale in the neighborhood at that exact time also is really having an impact. When people are seeing any factor like 3 same kind homes in the neighborhood, the sellers are like, oh gosh, do we want to sell or do we want to sit? Houses on the market don't age like wine, they age like bread. Emboldened buyers are hoping for those reactive sellers, and well-priced or slightly underpriced homes are still selling quickly. Investors, what should we do? We should go look for homes with higher days on market, perhaps that started with a slightly overly aggressive price point, and see if they're willing to play. With higher interest rates also comes a higher down payment need if you are going for cash flow. You cannot put 20% down on an investment and expect a cash flow. Finally, if you are selling, aim for the sweet spot. Don't overprice. The interest rates aren't on your side, but they're not going to go back to 4%. So price well to sell. There you go. The summary. But what are the rates doing? They're doing some of this and they're still kind of high. What they're at is for owner-occupied home, you're looking at the low 6s, but if it's an investment property, or mid to low 6s if you do an ARM. 6.175 with a 7-year ARM. 6.75 on a 30-year fix for an owner-occupied home. But if it's an investor loan, you're looking closer to 6.875, and the lower the down payment, the higher the interest you're paying. 40% is a sweet spot at ICCU, where they will give you an incentive for putting that much down. And multifamily with 30-year fixed, looking in the low 7s. So this isn't the order we had it on the agenda, but I don't know if you noticed in the invitation where I said first rate property management rental market update. We've got news. We've got news, folks. We do these every month. We kind of have a good finger on the pulse of roughly what's going on. You do anyway. And then all of a sudden there's that first time we start saying something. And that's today. So we're going to spend a little more time talking about the rental market. Then I'll get Danielle up here, and she will do the Canyon County real estate market update. And then soon we'll get Dan Rush from BSU. Yes. Okay, First Rate tracks their data as well as the overarching trends. And while their performance is looking pretty good based on the data they're tracking, there's a significant tell in the overarching trends. Trend: slight decreases in rent and increases in inventory. Now, we remember, because we were here a year or two ago, we were talking, oh, they're adding all these units, they're adding all these units. Okay, I got more on that now, finally. First Rate had 30 move-ins scheduled for July, which is a lot. And before the tenants left, they actually had a lot of those leased up. So they're doing pre-leasing, and those actually happen to be getting the same price, even maybe a slightly better rent price. Specials and proactive pre-leasing seems to be working and is key. But if you're coming up on any vacancies, do any of you know if you're coming up on any vacancies in any of your rentals? Okay, I see a finger pointing. Okay, well, if you are, Pay attention to the possible pre-leasing, and then also watch that listing as it goes on. More on that in a sec. Trend, tenants are moving around. So don't fall behind and let that unit sit vacant longer than it needs to. Keep an eye on it. Inventory. Zillow is reporting almost 3,900 available units in Treasure Valley on its website, advertised on its website right now. Yeah. And this is a significant rise in inventory, especially when we look back at prior years.
Do you suppose a lot of those are big apartment complexes?
Yes. That's a little bit of everything and a lot of everything. Mm-hmm. In July 2023, there were 1,551 active listings on Zillow. And that's a data point where FRPM started watching those rise. Yeah.
How far are you broadcasting the net for the Treasure Valley?
Treasure, like as far as, I'll show you a picture. How about that? About that far.
Cool.
And so this was July 2023, 1,551 units. And so I can see that, well, you can recognize Lake Lowell here, and Star is included. Kuhn is included. And here it is with 3,834 available rentals, a 151.4% increase in 2 years. And the number of
Some dots up there.
Zillow did. They're all the little rentals. So what are we seeing with rents? We're seeing up and down depending on where you are and probably depending on what type of properties are being rented. Boise rents are down $150 from last year at this time. And you can see, we're going to see this same graph a couple times. So have a look at it. Notice here's June, and then I guess this is some projection stuff. 2025 is this year, and last year is the teal line. 2025 is the blue line. And the scale of numbers here isn't huge, but yeah, we're showing 150 average down in Boise, but in Meridian up $100. Well, that's where there's a lot of more land for new builds. And so those new builds are full of amenities and construction costs are high. So those are renting for a little bit more. Nampa rents are down $128 from last June. But Caldwell, those are up 150, again, likely due to that new construction. And these are average rent prices. So what does this mean for you? Well, given the surge in competition, renters now have 2.5 times more choices than they did 2 years ago to choose a rental, and they kind of know it. They are price sensitive and deal driven. Listing exposure alone, just having an ad up, is not necessarily enough. Showings must be paired with competitive pricing, strong marketing photos, and move-in ready conditions. Time on market has increased, especially for properties priced even slightly above market. So the story is the same with renters and buyers. Everybody's price sensitive right now. They don't want to overpay. So the takeaway recommendations following from this is recognizing that we're in one of the most competitive rental markets that Treasure Valley has seen in years. With all these units available, renters have some leverage and they know it. So stay strategic and stay flexible. Respond quickly to inquiries and applications. Don't let them sit. And evaluate your listing price every 7 to 10 days. Be open to modest reductions to prevent extended vacancies, which often ends up costing more than a modest small rent adjustment. And then Tony would add to this, let's not forget to be careful. If you're renting a unit in a fourplex and you're trying to get $1,450 for a 2-bedroom, 1-bath, and everyone else in there is already paying $1,450, what happens when they see the advertised price becomes $1,350?
They move.
Yeah.
So how can we avoid that and still get the thing rented?
First month free.
Bam. Although you're on our team, you kind of knew the answer. First month's free. Can we translate that to move-in incentives? Keep that rent at $1,450, translate it into move-in incentive. And if you, whether you have an auto renewal or what, pay attention to those auto renewals when they're coming up and where your price point is. Have your property manager, or do pick up the phone and call, have a conversation with the tenant. Are you planning on staying? Find out what's up before they move out. Keep them in there. Retention. Okay. Any questions on the rental market update? Everyone's kind of got their wheels spinning, right? It's a wheel spinner. All right, Danielle Costa, come on up for the residential Canyon County real estate market update.
Welcome back, Stacy.
Thank you.
Yes, all happy to have you back. As you all know, I'm Danielle. I am with Swope Investment Properties as well. So I'm going to give you the Ada County single family home trends, new and resale combined. So right now we have, wow, I'm blind today. Cannot see. 580,000 is a median sales price in Ada County, while that is up year over year. And we're also seeing that the days on market are up, the amount of homes sold are up, and inventory is up quite a bit as well. For inventory, you can see we are at 27.2% up year over year. For Canyon County, which that is my specialty that I love so much, at my new house, I moved one street over, so we kind of joke that I'm the Canyon County girl. We are up with the median sales price, 3.5% year over year. I feel like we are seeing a lot of new construction in Canyon County that is bringing that pricing up. Days on market are actually down, 42 days on market, and we are at 12.5% year over year. Homes sold is up and inventory is also up. And that inventory in Canyon County is up 12.9% year over year. So with duplexes and fourplexes in both Ada and Canyon County, inventory increased by 1. So we are up to 81. Pending deals decreased again, this time by 5. So we're seeing inventories creeping up, but pending is creeping down. With sales decreased by 2, 0 fourplexes sold in Canyon County. And we've kind of seen the list month over month where there is quite a bit in Canyon County. Pricing's high. We've talked about that it is closed management. So I think that that could be a part of the Canyon County sales going down. Absorption levels all over the place, as you can see by the arrows. Especially with Canyon County, fourplexes highest at 10.2. So here you see 11 active Canyon County fourplexes. You see all of this pricing at Hamlet is starting to go down, which they have needed. This is the one that is closed management. Hamlet is correct.
I was going to ask you the same clarification.
I'm pretty sure. I think that was Max PM that we have mentioned.
Yeah, that's
Before Pamela's Loop and something.
Brassy
Way
Cove.
back in the day, Brassy Cove. And those, I like that area quite a bit.
So expensive.
I think they're new.
Age.
Yeah, they're brand new from what I remember.
And they may have 3-bedroom
Right, it's
units.
in the market. Silly.
Yeah, they've been sitting on the market quite a long time. And I know the HOAs were high from what I remember, and it was closed management. So I think that also ties into all of it. But I mean, I do think they are overpriced, especially for Canyon County. But I think they also had higher unit, like mixed units, 3 bedrooms. In Ada County, active fourplexes, we have Wilson that last sold July of 21 for $850 and is listed $611 for $975. So we've already seen it drop. Sitting for 35 days. Okay, perfect. So Tony Drost, Ada County fourplex data. We have 2 sales in February, a high end with garages at 1.1 million. We are seeing the average price start to go down. So 925 in Ada County. And the range is from 740 for a 1967 fourplex to 1.1 for a 2018 Meridian fourplex. I think the Meridian fourplex, I think that's Madden Village on Meridian Road that I actually manage as well. And that one went pretty quickly. Gross rent multiplier, we are trailing 6-month average consistently and has a range around 170. Cap rate, June's cap rate was 4.77, while the trailing 6-month average was 4.51. Days on market, we have seen them improve at 91 days, which is still higher than recent years. Ada County fourplexes rent price per square foot. You can see it here in June. Much lower than what it was in April. And then you can see the pricing from April to June. June is actually a decent amount higher, matching February's. Cap rates, we can see the trend of a decrease and it's starting to go up. Fourplexes are now selling instead of sitting. So we are seeing in 2023.
Sorry, that's an old headline. I forgot to delete.
That's when
Just
I looked at it, I
fourplexes.
said it, but
That little spot.
okay, so you are actually seeing in 2025, they are sitting a lot longer than they were in 2024 and 2023. But looking at the graph, I already said it, but that confused me. And that is the end of my slide. Thank you guys very much.
Any questions for Danielle or I on the market update or the rental market update? Hi, Alex.
Put the cap rate that, and is that was on trailing 6 months?
Trailing 6 months is 4.77. And here it is in pictures where you can see the red line is that trailing 6 month line. And we don't have a ton of sales in each month. So, you know, that trailing 6 month helps because you get the oldest one that sold was the lowest price this past month at $760. Yeah.
We seem to drive by a lot of these cities, apartment projects, housing, like, I think a lot of them are low income or have a lot of low income. Do you have any data on the occupancy of those? Or is that just
Occupancy of newer projects. Is that what we're asking about?
newer projects that are mostly city owned or city developed?
I do not. No data on that.
I can look into that for you and see if we can find it, because I know which complexes you're
Okay.
talking about. Yeah, absolutely.
We noticed there are if you drive by in the evening, there are very few lights on. So.
Yeah.
And are those newer complexes still getting leased up?
But they are low income housing.
Okay.
Yeah, but they're very beautiful, very modern. So it's, yeah, I'll be happy to look at the vacancy rates for you.
We can follow that
I
up
asked
next
you
time.
The fact that last night's budget presentation for the city, that they're proposing a huge property tax increase and the budget was increased greatly. And so without a lot of detail, it's real hard to get detail out of the city. You have to wade through hundreds of pages.
Dave,
Stacy, so that's those are the cap rates for fourplexes. Do you have an idea of what duplexes, how that changes cap rates?
yeah, let me think of what that idea is that I have in there somewhere. I think lately it's been there's not been an incentive to buy a duplex. So I can't think of what the number is. It's probably quite similar, but in terms of showing investors duplexes, I look at all the pro formas, and right now what's winning is you can find a single family for a 4.8. And so when you sell a single family, you can sell it to anybody, an investor or an owner occupier, and there's a lot fewer moving parts. So some of the would-be fourplex buyers are like, fine, I'll just buy a newer single family home. Rarely are they selecting duplexes. Duplexes are about 50% of your inquiries will be owner occupants. So there's a little extra buyer pool of investors and owners in duplexes. So I guess the demand for those is just enough to make the return usually a little bit less. Yeah, the price point on those can be anywhere in the like mid 500s for an older duplex. And it can be in the mid 8s for something as it gets newer. And so when you think of it in a price per unit standpoint, well, that would be $1 million fourplex. If it was a, $250 per door at a $500,000 duplex, and that's going to be an older duplex. But I didn't give you a camp rate. I gave you a lot of info, but I didn't really answer your question. Sorry about that. So maybe even in the threes, if I had to guess. Any other questions?